Hello, guys, and good evening. Chats with Korea here. So, this is a trade breakdown of the trade that I took today on gold. I took sales on gold from the London kill zone and I held them till the New York kill zone. So, let's get into it. Top down analysis from the daily chart to my entry, which I took on the 1 hour chart. So, let's see what I saw to get to that decision to take the shots. Okay. So, when I came to the daily chart today, what I noticed is that also, of course, when I come to the daily chart, I want to observe what the last 3 days have done. So that is what I did today on gold. And I can see that on Monday, we had this uh, kind of bullish candle, but the bodies were not closing above any high. So, of course, that is a sign of that price wants to reverse. Okay. So we had this daily fair value gap right here. We had this daily fair value gap, and then you can see how price has been reacting from that. So that becomes a very important level that you need to watch on the daily chart. So I saw that Monday we tapped into that area, the discount side of that fair value gap, and then we retraced back to the downside. On Tuesday we had an inside day, which is a ranging day, which is very normal for a pre-FOMC day. So because we had FOMC yesterday on Wednesday, so on Tuesday it's normal to see such price action. So I noticed we had that, and then yesterday on Wednesday during the actual FOMC, what we did is we swept the current weekly high which had been formed on Monday, and then we went back to the downside, forming a daily change in state of delivery. So of course I have to mark that as my daily CISD, but I think it will cloud our chart. So as we go lower, I will remove it. So this became my daily change in state of delivery. And as soon as I saw that, I knew that today, as a post FOMC day, I want to see price continuing with that move to the downside. So of course, what is my next drawn liquidity? It's either the previous day low, or I go to the 4 hour chart and look for something that I can hunt. So that was my decision. I will go to the 4 hour chart and see what I can get. But first of all, let us also look at silver. What had silver done? So looking at silver, we had the same thing happening. Okay, we had the same fair value gap, the daily fair value gap. I usually have a different color for this, so let's just put it on. But I am deleting this when we go to the lower time frame. So you will notice that price had reacted from on this fair value gap with the Monday's candle. Okay, Monday's candle. So we entered into that area, and then on Tuesday we had somewhat of a consolidation, because you can see the candle has a very small body and very huge wicks to both sides. So that means the day was a ranging day, and as I have said, that is normal for uh, a pre-FOMC day, or maybe a pre-high impact news day. Okay, so pre-NFP, pre-FOMC, pre-CPI, you expect to see such price action. Okay, a consolidation. So let's now go to the okay. I usually cross check with the futures to see if I have the correct thing, because futures have more algorithmic or accurate price action. So I saw the same thing. We had swept this buy side liquidity, dipped into this area, and then formed a daily change in state of delivery on both assets on the futures chart. Okay, so as soon as I saw that, now I can go back to my metals chart and then go to the 4 hour chart or the 1 hour chart. So in today's case, I went directly to the 1 hour chart. But before even we do that, you can notice that we had this 4 hour change in state of delivery and a BOS. So a break of structure. So we had a BOS, break of structure, right here, and a 4 hour order block right there. So we can see this better when we go down to the 1 hour chart, but let us also mark them on the 1 hour chart. So I will remove that one. Then this CISD, you can see it's also yes, so that is the change in state of delivery. So you can see that yesterday during FOMC, price was able to close candle closure below these lows, so that becomes a break of structure. And what that tells you is that you want to see price retracing back to the upside and then breaking to the downside with a lot of momentum. So because there was no clear fair value gap or key levels that I was observing here, I decided to go to the 1 hour chart. I prefer to go to the 1 hour chart, which gives me cleaner changes in state of delivery and cleaner entries and cleaner retests to my key levels. Remember, I have only three key levels. I use the previous lows and previous highs. And then I also use order blocks as my key levels, and then I use fair value gaps or gaps in general. They do not have to be fair value gaps because, for example, this is not a fair value gap. This is a new week opening gap. So I also use those as my key levels. So I went to the 1 hour chart to look for a better key level, and I noticed that, remember, we have marked this on the 4 hour chart. We have a daily change in state and we have this break of structure. Now we can see that we have this 1 hour fair value gap, a very big 1 hour fair value gap, which is very good to use. So I marked it out. Remember, all of this has not played out. All of this has not played out. So I usually mark this with a grayish color to just differentiate it with the other ones. So I saw this, and then now we have the 1 hour order block, which is just above here. So now I have several levels that price can reach into. So I have this and I have this. Okay. So coming today, now let's get into today's price action. Okay. So I came during London session because I do not trade the Asian session unless I had a pending setup during the New York PM session. So when I came in during the London kill zone open, which the kill zone opens at 2 a.m. New York time, remember to always set your charts to UTC -4 right here at the bottom. You can just go here, click it here, and then look for it. Okay, so 2 a.m. to 5 a.m. is the New York kill zone, and I want to take entries between that time window if I want to be trading during the London session. Okay, so this is my order block, and then this is my fair value gap. Those are two key levels that I would expect to see price reacting from. So when I came to the London kill zone, this had already happened, this retracement to the upside, because as you can see, it started at 7, it actually started at 4, 5, 6, 7, and so forth. So I just wanted to get some reaction here or here, and then I could take my longs. So basically what I'm saying is I could have two positions. I could have this one as my first position, and then I could have another position. If that will be invalidated, I will have another position right here. Okay, so maybe a stop loss of something like that. Okay, so basically that's how I trade. Okay, so let's stop going. Okay, so back to this piece of price action. So this is a 1 hour fair value gap, and I noticed that during the Asian kill zone, Asia kill zone runs from 8 p.m. to 10 p.m. New York time. Okay, so here is 8 p.m. this huge bullish candle, and then here is 10 p.m. So I noticed that on gold, remember we are on gold right now. I noticed that on gold we have three consecutive candles driving inside into the 1 hour fair value gap that I want to see a reaction. And then on silver, I noticed something very interesting. We have formed something that is called a swing high. A swing high is a high that has uh, another high to a lower high to the left, to the right, and a lower high to the right. So this becomes a swing high. And then on this side, we have three consecutive candles, which are happening during a very key time, which is the Asian kill zone. So remember in the video that I did on Wednesday, I think yesterday, or maybe on Tuesday, I talked about SMT. So you'll notice that this is the 9 p.m. high and this is the 10 p.m. high. So in on gold we formed a higher high, while on silver we formed a lower high. So what does that tell you? So SMT, basically, as I taught last time, it gives you, it's like the market showing you its hand. It's now the market is showing you that it's willing to drop the prices, or maybe it's willing to trade lower. So in this case, silver was the one that gave us the so hii ni kama Mwakenya. So silver is the one that gave us this signal, or maybe that sign that price is ready to drop to the downside. And remember, this is happening during Asian kill zone, and also very important, it's happening during the Asia kill zone, and it's also happening on the fair value gap, which is a key level where I want to see price dropping from. So as soon as I saw that, remember I'm seeing this at 2 a.m. New York time, which is probably around 9 a.m. Kenyan time. So, okay. So what is the next thing that I do? If you have watched my videos, once price has given me such a thing, we have reached a key level, we have formed an SMT. The next thing that I want to see is a confirmation that price has shifted to the other direction, and that is exactly what I saw. I saw that the 1 a.m. candle had traded to the downside and formed a 1 hour change in state of delivery. And whenever I see that, I want to enter immediately the next hour candle is opening, when the next hourly candle is opening. So now I have aligned several confluences. Remember, from the daily to the 4 hour, and now on the 1 hour chart, I can see that we have formed this change in state to the downside, SMT, key level, break of structure, daily change in state of delivery. There are a lot of things here that are aligning. So I took my entry at exactly 2 a.m. sharp as the candle was opening, or maybe 2:05 around there. That is when I sent the entry to my group, and I placed my stop loss just above the Asian kill zone high. Okay, because remember, as I taught last time, this becomes a protected high, and actually this trade is supposed to be taken on silver, but because of the spreads, I opted to take the trade on gold, because silver is the one that formed the lower high, which means it should be the one delivering faster, and it actually did that, exactly that. But because of the spread, I chose to go with gold. So 1 hour change in state, 2 a.m., which is the London kill zone open, perfect time for entry. I took my entry, placed my stop loss just above the Asian kill zone. So you can see that I'm only risking, what am I risking? I'm only risking 230 pips to get 720. So that is a 3R immediately. So my target, so the next sell side liquidity, that is another question that I should ask. This is the sell side liquidity that I should have been targeting. Why? Because this is the previous day low. Okay. But through my trading journey, I have learned that um, the weeks break the rules, and then the bodies tell the story. So you can see that we have some sort of equal bodies right here. So that is where I usually like to place uh, my take profit. Okay, because sometimes, not all the time, sometimes price will sweep this part and then maybe leave the week to be. Okay, so sometimes price comes to this level, sweeps that, and then it retraces back to, it reverses back to the upside. So basically I just like to take my profits at the bodies rather than the wicks, but either way, uh, yes. So yes, that was, oh, I've actually finished. So that was the trade. Maybe I should talk about how I managed the trade and how I added positions. So looking at the 1 hour, what I wanted to see so that I can add a position was, what I did is I added a position once price broke here. Okay, so let me hide this. This is a 15-minute chart. So you can see that at 3:30 we had this surge to the downside. Remember, 3:30 is still within the London kill zone. So as you can see, we had this drop to the downside. Okay, so when I got this candle closure below this area, I added a position here, which I took off at around 42.55, which was around 250 pips, something like that. Uh, I have actually forgotten to talk about DXY, and I shouldn't have gotten this far without talking about DXY. So this was a two. No, 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 no. It should be a. The trade was actually around 2.9 R, something like that, I think. But it's because I adjusted my stop loss. So let's do a quick look at DXY, because as usual, I do not take any trades without the confirmation of DXY. Okay. So What do we have here on DXY? Okay, DXY we have slightly the same thing happening, opposite thing happening, which is usually what I want to see on the daily chart. Remember, I told you I start my analysis, top-down analysis from the top, then I come aligning confluences from the higher time frame to the lower time frame. So on the daily, what I noticed is that on Monday we had the daily candle retesting this daily propulsion block. Okay, so this is a propulsion block, or maybe still another block. Okay, let's not emphasize, put much emphasis on that. Monday we had that retest to this order block, and then on Tuesday we had some form of inside day, which I've told you is normal to see on pre-high impact news days. Okay, pre-NFP, pre-FOMC, pre-CPI and such. And then yesterday on the actual FOMC day, we had price surge to the upside and a candle closure above this high. So you can see this is buy side liquidity. As soon as we got that candle closure above that, I was sure, or maybe not sure, I was quite certain that price was going to target these highs. Okay, so this was my next target. So as soon as I saw that, I knew that this will be my next target. Buy side liquidity. Um, Buy side liquidity, this is a break of structure on the daily. I'll mark it on the 4 hour and show you more. So as soon as I saw that, I was sure that we were going to continue higher, which means that if I want to see DXY, the dollar index, trading higher, I want to see gold and silver delivering lower prices. Okay, that is how correlation works. Okay, inverse correlation. So you can see that on DXY we had this break of structure, so I'll mark it here on the 4 hour chart. We had that 4 hour BOS break of structure, which means I just want to see a retracement and then price going to the upside. And usually on my retracement, I do not predict how far the retracement will go. I just try to predict that the retracement is over. And the thing that I use to predict that is a change in state of delivery. Okay, so we have two gaps. Okay, so I will observe the reaction on the first gap, on the second gap, and on this gap. Okay, so uh, I would have talked about breakaway gaps, but that will make this video longer and even more confusing. I just want to make it as simple as possible. So notice that we had that fair value gap as price was breaking away from this high, and then so we even have another break of structure here, but story for another day. Okay, so I will just delete this so that you can see what I want to show you inside this piece of price action. So you will notice that we had these consecutive candles to the downside, and then we had this one as the last down close candle. Okay, before this one happened, so this became my 1 hour order block, and then this becomes a propulsion block. Okay, so I marked this out, and as soon as price closed above this, now I was quite sure that DXY was going to continue with its move to the upside. So look at the time that this happened. So this is where it even gets more interesting. What time is this? This is 1 a.m. You can check the time that is coming at the bottom of my screen. So this is 1 a.m. The change in state happened at 1 a.m. Remember, the change in state happened on this other asset at what time? On gold, I mean on gold. It happened at the same time on 1 a.m. So going into the London kill zone at 2 a.m., we already have our change in state. And remember, if all of this has happened, now I just want to see price displacing to the upside. So basically what I wanted to see on what on DXY is a long position taken from here because the change in state has occurred. I just want to see something like that, slightly lower than the original low, then targeting the buy side liquidity that I have told you about right here. So we had that, and price went to the upside, and yeah, so that was my logic on DXY, and that is how I used it to support I use it as a confluence to support my bias on gold. So and you can see during the time that I closed the trade on gold, we had this change in state to the downside, but I think I will leave that for another time because it might complicate this video. So yes, so that was the dollar index top down analysis and gold and silver top down analysis. That is how I took the trade, and basically that is how I trade. And if you've been watching me for a while, you will notice some pattern. Okay, it's not pattern trading, but it's pattern recognition. Okay, so basically you need a key level, you need to see a certain reaction to that key level, you need a confirmation that the key level is working, and then you take the trade, place your stop loss, and let it be. So that was it, and we were able to catch, let's see how many pips were those at 2 a.m. uh, I got off at around 42.43, so around 650 pips, something like that. Yeah, so today's price action was very good actually, and I would love to see such price action going uh, into the rest of the year. Thank you for watching the video. Remember to subscribe. My channel link is on my bio, I think. um, okay, if you found this video, you can find my channel. It's my link is everywhere on my bio. My contact is in the beginning of this video. Yeah, for professional account management, you can always hit me up. I do not flip accounts, but I manage accounts professionally. So yeah, thank you for watching. Remember to like, share, subscribe, all those things. I appreciate you. Peace, 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 peace.